Okay, it's recording now, so welcome everyone. And yourself, if you just come on, please. Welcome, I'm Pardo. If you don't know me, I've been Proud iMarkets Live member for about 11 months now. I've been educating for the last 6-7 months. What I do works, it's been proven to work over time. But what I will say is I can't talk about account percentage growth. I can't talk about profits or any of this stuff because it's against company policy. So, if you're in here and you don't know anything about IML, then please, I can't talk about this stuff. But you'll have to take, my word for it, and all the guys in here that have been following me for like 6 months, all right? Because it works, right? So, what's important to remember is IML is a company with more than one trading strategy. So what I'm about to talk about isn't necessarily the only way to do it. There's hundreds of different ways to do it. There's hundreds of different ways that will work, okay? But what I'm doing is something that works for me, and it's something very simple that people can follow because essentially it's just lines, all right? So with that being said, let's get on with it. Okay, so the thing I want to talk about before we get cracking properly is sort of the mindset and how the risk that required to trade for life, compound your account for life, potentially more than 10% a month, like we say. Okay, I know there's a lot of people doing very well through compounding. Right? If you don't know what compounding is, video I can show you. But what we're saying is, everyone else, in the Forex industry, okay, you see all the people on Facebook saying, oh, look how much profit I've made, look how much my account's grown, okay? 90% of the time, what they're doing is they're risking like 10, 20, 30, 40, 50% of their accounts to get profits, all right? And it's drawing people in. Now, what we say is 2%, okay? 2% is all you need. Risk 2% of your account, and you will earn substantial amounts, okay, if you stick to your strategy. So what I mean by that is, for instance, if we looked to short USD Canadian dollar, if we look to short it here, as in we're looking for it to go down, okay, what we want to do is we want to squeeze 2% risk into an area, okay, between your entry point and your stop loss, okay? So what I mean by that is, if you were to enter, okay, on this blue line, okay, wherever your stop loss is your risk, your profit regulator, okay? So if you've got a 50 pip stop loss between your entry and your stop loss, okay, if that's 50 pips and you want to risk 2%, okay, if your account is 5,000, your stop loss is 50 pips, and you want to risk 2%, okay, your lot size is going to be 0.27, right, which is £100 risk, 2%. Okay, so if your stop loss is there, your lot size is 0.27, right? And then if that goes all the way down, then you're going to earn a lot. If your stop loss is less tight, if your stop loss is 100 pips, your lot size has halved, 0.13, okay? So the profit isn't as great, but you've got more chance of staying in the trade because the trade's got more chance to, more area to breathe, okay? So that's what we mean by, squeezing 2% risk in, okay? The stop loss is the most important tool you have. Wherever you place it, okay, calculate it, okay? If your stop is way up there and it's actually like 500 pips, 0.03, okay? So you can see it's not going to be a profitable trade. That doesn't make sense to have it all the way up there, okay? So it comes with time, it comes with experience when you put the stop loss. But the important thing to take from this is 2% consistently will get you the compounding that you need to trade for life, okay? And then when your account has grown by an amount, okay, you can continue compounding, you can live off the ways that you withdraw or whatnot. That's the point I'm getting to now. And I don't risk more than 2%. None of the Team Alpha risk more than 2%, there's no point, okay? Don't believe the hype that you see, all right, from all these people that post profits constantly. So now I've said that, the other thing we want to talk about is patience and discipline, because you won't succeed in Forex if you don't have patience and discipline, right? So if I just load patience and discipline is, if you regulate your profit with your 2% risk, okay, it's patience and discipline that will get you in at the right times. So what I mean by that is, if you have a setup, okay, it's only 1 hour. Now, there is a top here. Okay, an established top, okay, price doesn't go through. If we want to go short here, if we want to come down like this, you can do it on these levels if you want. But what I want to talk about and the way that I trade is with patience and discipline. So, and I'll talk about this more in a minute. But what we actually want to see is a trend break and then short. Okay, so if you think price is coming down here, okay, you can sell that if you want, but there's a good chance it won't stop there and it'll just keep going up. Okay, what I'm waiting for, which takes patience and discipline, and actually this took most of the week, okay, is for price to get on the other side of this trend line, okay, and then get back to that area. And that is the point at which you can short it. Okay. Now, ignore the fact that it's gone back up to that area since we took profit down the bottom. Okay. Patience and discipline. And this is how to do it. A lot of people would have seen me do this before. I'll make no apologies, I'll do it again. Okay. This is how the Forex market works. These are support and resistance areas. Okay, these are invisible lines on the chart. Okay, you can't see them, you've got to plot them yourself. These are areas where price moves between, okay, like this. This is how they move, it moves in triangles. Okay, price does not get through these. Or it does get through them, but it finds it difficult to get through. Okay, so what I do to indicate this movement is I put triangles on.
You need money. Go get a fucking bank loan, love. Do everybody else does, go and get a bank loan.
Charts moving triangles. Okay. Now what will happen is at some point that line will be broken and it will move into the box underneath. All right, and then it'll move back up. Then it'll move back down. Okay, and sorry, who's unmuted? I've got to mute you. I don't know who it is. Oh, it's Graham Masterton. Oh, I'm Graham. Okay, and this is how the market moves. And what we want to do, okay, is we want to only take trades where the market generally buys or the market generally sells. So I put these green boxes indicate an area where price buys, okay? Because in this area, price goes up. All right, it's that simple, okay? We've got these dotted lines across the screen, okay? Price in the green area moves this way. In the orange area, it moves this way, okay? This is the invisible barrier, the support and resistance. Okay, so think of it like this: if you're shopping with your missus, okay, and M&S is on the bottom floor, okay, you're just wandering along aimlessly on the bottom floor while your missus gets her handbags and everything like that, and then she decides she wants to go to John Lewis. So she goes up the stairs, okay, then you're on the second floor, okay, and you're moving on to the second floor, and then she needs the bog, so you go up to the third floor for the toilet. Okay, it's sort of oversimplifying it, but sort of how it works. So within these areas, okay, all you want to do is, if you can identify these areas, short or sell within the orange box and buy within the green box. Okay, that's supply and demand. Supply, being the orange box, is the area where price normally sells in history. Okay, so when we do this, okay, we avoid all the noise, okay, that the retail traders trade in the middle, okay, because this is where the bankers trade. This is where the bankers trade. This area in here, okay, this is where all the retail traders trade. Okay, the people that don't succeed in Forex, they trade in the middle. Okay, so what we want to do is we want to avoid trading in the middle, be patient, wait for our triangles to form and put price in a position in which we can short it at the top or buy at the bottom. All right, and that applies to trend lines as well. Okay, so these dotted lines are support and resistance lines in the horizontal plane. Okay, when we put a trend line on, it's exactly the same. Okay, so what a trend line is, it's demand on the top, supply on the bottom, exactly the same as our horizontal lines. Oops. Okay, and this is how it works, right? So again, we buy in the green, we sell in the orange. Okay, so this is where sort of my trading comes, you know, stands out now. It's because I look for these trades, that trade, okay, because it's not only a buy in one plane, okay, it's a buy in two planes. Okay, so this area here, because there's a buying area on this top of this trend line, there's a buying area on this horizontal line. Easy way to look at it is there's 2 points of contact for demand there. Okay, so the chances are, if price hits this line, it can go all the way through, yeah, and then down into this box. Okay, because as long as it's on this side of that trend line, it is a buy. All right, this is called trading with the trend. Okay, as soon as price comes onto the other side of this trend line, okay, we're looking at a sell. So let's say, for instance, price came down, or let's say price goes up here, then it comes down to this area and it goes through, which doesn't happen often, but if it goes through that demand area and comes up here, now the bias has changed and we're looking for a short purely because it's on the other side of this trend line. So when price comes back up to test in this area, we've now got 2 points of contact for confirmation for a short trade down to there, okay, or down to there, or whatever, okay, because when price breaks through these areas, it always tests and it goes up. All right, so this is what we look for: the break of these areas and then the test, and we buy or sell, or we trade with the trend in the areas of multiple confluence. Okay, all right, any questions so far? You can unmute and ask questions if you want. There's nothing in the chat. Okay, all good. So hopefully that makes sense how we trade. Okay, so
David.
Yeah, go on.
So do you only buy and sell on the pullback then?
Yeah, I suppose it is. Yeah, because if price is ranging here, you can buy the bottom, you can sell the top of these. This isn't a pullback. This is more of a range. But then when you get that extra confirmation come into play, okay, that is the one where you're going to, that is the most likely trade, because you've got the trend line as well as this area of demand. So that's range trading, okay? This is trend trading, because you're looking for that next move up on the trend. We'll see if we can find an example. Pullbacks would be more, it breaks through and then it pulls back for the retest, and that's the trade. So yes, it's swing trading, it's retracement trading, somewhere in the middle, okay? That's why I called it Blash, okay? Because it's not a set style, okay? It's more swing trading, but there's certain things I look for, and as long as they're available, I take the trade, no matter whether it's a range, a retracement, whatever.
Okay, thanks.
Look for an amount of confirmations from horizontal support resistance. I'll talk about confirmations in a bit. So on the, just the last thing on this little diagram here, okay, out of all this mess, okay, the only areas I'm really interested in trading are that little zone, that little zone, that little zone, that little, oh, sorry, not that little zone, that little zone, that little zone. Okay, and this is the reason why this has such a high success rate, because everyone else is, you know, trading here, 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 here. They're trading everywhere, okay? The fact that I'm waiting for multiple areas in which to come into confluence for a certain trade, okay, that's why it's so successful. And that's why it's swing trading with, I don't know, 80% accuracy this year on the setups, 80% plus, all right? Because it's the patience, it's the discipline waiting for price to get in that area, all right? So let's have a look. What's a good example of this currently? Let's see if EU's got a good example. So with Euro USD, okay, it's a fairly good example. We caught a buy on this a couple of weeks ago because for a couple of reasons actually. So if I put my trend line in from the bottom up through here, okay, we could see that there was going to be some kind of reaction on this trend line because this is on the buy side. Yeah, because when price is over the trend line, it buys. Yeah. We also had this support resistance or demand from this zone here. Okay, so we know that price bought here as well. Okay, so that's what I would call a BL2 or a buy low 2. Okay, because I've got a numbering system for this. So there's two areas of demand there, okay, which should say to me there's going to be a reaction there. Does that mean I'm just going to buy it without other confirmations? No, of course not. But it's something to look at and go back to and then look for your confirmations. It's fairly self-explanatory. And then if I was on the same chart, if I go on the weekly, okay, and this is an example of looking back in history and seeing what's going on. If I put a trend line down from here, okay, you can see it's where price ended up a few weeks ago, okay, bottom side of this trend line, therefore, if it's on the bottom side, you can sell it because that's what happens in history, and then you have multiple chances to do so. Okay, multiple chances you get into this trade. Okay, and then if you held it or you took profit, well, You can take it there. Sorry, you don't take it there on Mike. This is another, what I'm talking about now is another reason why it's so successful is the pick tops. Okay, so even though we've got a trend line here, sorry guys, can you mute? Even though we've got a trend line here, we're not going to pick the top, okay? What we're going to do is we're going to wait. We're going to wait to see what happens, okay? So there's a trend line here, there's a nice reversal there, but we don't sell that one. What we do is we wait, okay? We wait for the retest. So you can sell that, you can sell that, you can sell that, okay? There's 3 opportunities to get into this downtrend. Okay, the point is we don't take the first one because we don't know it's the top. Okay, once that top's established, when we get the retest, we can then look to short it, and then again, and then again, and then if you have your support or resistance on the bottom, okay, if it doesn't break through this area for the downtrend, you can just take profit there. That's a take profit point. Okay, and this is the whole. This is exactly what I was talking about. And it applies to taking profit as well. If you've got your selling area at the top, then you must have your buying area at the bottom. Okay, so why would you take profit or trade in the middle? Why would you trade in here? There's no point trading in here, okay? Price moves in different ways in here. Let's wait for the tops and the bottoms. Yeah? And that's sort of the point of the whole thing. This whole box in the middle, okay, it's a no trade zone. Yeah? You don't trade in there. If you've established a bottom, you've established a top, okay? What do we think the overall direction is? Well, on the weekly time frame, okay, is a trend line hit on the weekly time frame. So we're probably going to look for a down move here. So the preference would be to sell the top, but there's nothing stopping you buying the bottom if you want to buy the bottom, okay, and then you get that move, that move, that move, that move, that move, that move, and then you can short it again, bang, all the way down. Okay, and this is why or how we get you know, the 800 pip moves. Okay, this is how it works, guys. The power moves. So what else can we look at with this? You can put more uptrend lines in. Okay, you see how price respects trend lines. Okay, so this is an example of a buy again. This would be a daily trend line. This is a weekly trend line. This would be a daily trend line. In fact, you wouldn't buy that because it's only second hit. But okay, what we can do. So if price is on this left, on the top side of this line, we can buy it. If it's on the bottom side, we can sell it. Okay, so you can see once price breaks through this area, okay, it goes straight down. All right, so this is the shorting side. So if you want to get into the long-term trade, then you get on, you sell the shorting side. Okay. Any questions? Trying to think of a good example.
You know, you draw these trend lines and support and resistance. Which time frame would you use to actually draw these?
Go back to the weekly, and well, it depends what this applies to all time frames. So, what a different time frame will give you a different trend line, whatever's relevant at that time. So, if you know that the overall trend on your USD on the weekly, okay, if it hits this area, you know how powerful trend lines are. Okay, so you know that if it hits this area, it's probably going to go down. It's at least going to have a reaction to go down. There's going to be a reaction there, so it's a relatively safe trade. But if you go down onto the 4 hour, you don't really see that. Okay, it's different. Okay, you can't see the overall picture. So what I would do is I'd go back on the weekly. Okay, put any relevant support resistance in there, like that trend line, like this support resistance line, because obviously, you know, you've got multiple areas here of strong support resistance. So this area here, okay, it's fairly self-explanatory, okay, because look for the areas price reverses, okay, and then give yourself these ranges, okay. So on Euro USD now, if it's a buy because it's on the bottom, it's hit a trend line from above and it's on a support zone. If it's a buy above this line, okay, then the chances are it's going to go back to there, okay, or close to there, all right, and that is a head and shoulders formation, okay, which is another powerful part of the way I trade is formations. So just do what's relevant. You don't need to go overkill, okay. I see people going on the monthly, okay, and putting trend lines in, you know, up here, there's lines like this, right? If I see a chart like that, okay, you're not doing something right. That is incorrect, okay? Just put the relevant data in, the most powerful areas of support resistance, and trade off that, okay? So, what else have we got? How do you identify the zones? And the zones are fairly loose. Let's do GBP JPY. This is a good example at the moment. The zones are fairly loose. They're just general areas where I'm going to look for a sell. It's basically where price exhausts. So if we look at GJ, okay, it's a fairly good example of overall how price moves. So I'll just chuck a couple of trend lines in here. Okay, so trend lines have 3 points of contact to make them. Okay, you can see 1, 2, 3, 4, 5. 1, 2, 3, 4. Okay, 1, 2, 3. All right. So support resistance in there, and all of a sudden that's a chart setup, guys. That is a chart setup. Okay, and the reason for that is this long line indicates the breakdown of the uptrend. Okay, there's the retest for that trend line up. Okay, it's passed through the buy side of this trend line here, which would indicate a sell. Okay, and it's also a third hit on the underside of this trend line here. So what we're saying here, guys, is there's multiple areas of confluence for a short here. Okay, and obviously you've got this really strong area of support resistance in the middle, okay, where price does not like to go through, okay, on either side. So in actual fact, you know, there's 1, 2, 3 areas, okay, of short confirmation there, okay. Here, what is the current trend? Well, okay, you've got a high, you've got a low, you've got a lower high, you've got a lower low, okay? That's a lower high than that, and here's the next retracement, okay? So we're looking for the down move. Nothing's guaranteed, guys, but you know, this is generally the setups I look for. Okay, multiple areas of confirmation for a short trade. Okay, using trend lines and horizontal lines. Yeah. So then, if we went down into, let's do the 1 hour actually. Okay, so if we look on the 1 hour, what do we look for to enable us to get into this trade? Well, what we're going to do then is we're going to do another trend line. Okay, if we've seen this on the larger time frames, we've got all these areas of confluence. What we're going to do is we're going to put another trend line up through there, yeah, and which stops us from shorting the top or picking the top. Okay, so we haven't picked this top here because it hasn't broke the 1 hour trend. Okay, what we're waiting for to get into this trend, into this move, is for price to come through this trend line and then retest somewhere. Okay, and it's vitally important, and it's one of the other reasons that this system does not lose very much. Okay, so there's an entry there, there's an entry there, there's entries there, there's an entry there, there's an entry there, there's an entry there. Okay, all because they've broken the trend line on the 1 hour uptrend, but they haven't broken these other trend lines that I've drawn. Yeah. So if you enter here, okay, this is where the discipline comes in. So let's say you entered, in fact, I got quite a poor entry on this last week. If you entered, let's say here, okay, you entered there, and then your stop loss is above the high, obviously. Okay, that's probably about a 50 pip stop. Squeeze 2% into there, big profit on the down move. If you got into there and it's impulse down and then retraced above your entry, what are the chances that you have moved your stop loss safe? You know, there's nothing wrong with taking a bit out of the trade and moving your stop safe, but it's the break-even concept implies that long term you won't be as profitable unless you let the trade run and believe in your trade. Okay, because this here, when it goes back above your entry, this is where people start panicking, or just before price retraces all the way back to your entry, people start panicking. Okay, and then they get out of the trade with like 50p profit, and it's stupid. It really is silly. Okay, just if you get into a trade, you've got to believe that that trade is going to go to a certain point. And what point is that? Well, let's break it down into areas that you can take a bit of that profit out. Okay, so if you get into the trade there, where it's going to be the first take profit point, I would suggest it's going to be at the last level of support, because you believe price is going down. Okay, you're going to get a take profit point at that last price reversal area. Okay, the last area where price was demanded. Okay, so you can get, with a bit of patience, okay, you're giving yourself that's 130 pips there. Okay, and what it's taken is a little bit of drawdown. Okay, but then it's finally gone, and you've got your 130 pips. Okay, will it go down again? It's very likely. Okay, so what I tend to do in a trade like this is I'll just put more lines on, guys, and take profit out of certain areas. Okay, so you'll take profit points on this. Well, there's going to be one at the last area of demand, the price rejected here. So when it comes back to here, you're going to put a take profit in there. Okay. There's many ways to do this. What some people do is they'll put a Fibonacci on the whole up move, add areas of take profit to that. Okay, so let's say, okay, one price gets to a 50%, I'll take profit. When it gets to 61.8, I'll profit 78.6, whatever. Okay, well, if you really worry about your trades and breaking even, if you're really worried about losing the trade and losing that 2%, 2% is nothing compared to the down moves we catch when you get trades like this. Give yourself a point at which you're going to move your stop to break even, because if price moves like 5 pips and then you're breaking even, then you're not going to be profitable as a trader. Okay, you need to give it time to breathe before it comes down. All right, so like when you see this happen, okay, if price drops impulsive move like this downwards, okay, you can say to yourself, right, I'm going to break even here because there's a line of support resistance there. Okay, I could either move my stop above that retracement, yeah, so that I get some profit if it comes back up. There's many ways to do it. This is really easy to do, but people don't have the patience and the discipline to wait for their trades to run. That is the overall problem. Yeah, Bill, pretty much. You're pretty much spot on, yeah. And that's actually a good way to put it. If it's in a shorting area, right? So as long as it's in this general area, you know, you should be happy for price to move around like this, okay, as long as you don't get that impulse up, okay? At that point, the trade's invalid, okay, because it's broken these multiple areas of, you know, supply, okay, and then what it's going to do is it's going to come back down and go long, right? A good example of this is UCAD right now. Okay, you see what's happening on UCAD, okay, that big long bullish candle. Well, you know, if you went short on this, you've probably been stopped out, okay, and that happens. Invalidate trade, it would need to break out. Yeah, it's all well and good saying that, but where's your stop loss going to be, okay? If you're in this trade, your stop loss is going to be above this high, yeah? There's no point putting it, you know, in this mess here. There's no point getting into a trade and putting the stop loss in this consolidation area, okay? Because price moves each way here. Put it at the top, guys. This is another thing that stops many people, okay? Stop loss placement. It's a profit regulator, like I've explained, but be sensible about it. If price doesn't want to get through that area, put it above that area. It's simple, right? Here's another tip. Round numbers. Round numbers. 148. Here's another line for you. Oh, 147. Look at that. Yeah. Even if you'd seen this trend line break, all right, and you wanted to be lazy, about this, you could just put a pending order on 148 because it's a round number. Price doesn't like going through round numbers, and if you know, in the grand scheme of things, not over long-term history, 148, okay, it is the support resistance line. All right, so it's another confirmation. Price once below 148 probably won't want to go back above. Okay, so if you wanted to catch that whole move, you could have taken that chance and put a pending order on 148 if you wanted, and you would literally have zero drawdown. Okay, but that's a risky thing. It's the same with UCAD. Okay, I've got this line in 130. Let's look at 130. Look at that. Boom, boom. Okay, boom. There's 3 hits. And then what happens here is we're still expecting the down move, but it's gradually pushing past 130. And then when it finally goes, it goes really strongly. while we're on this chart, let's talk about some more stuff. So, okay, how does the price form? Well, we were expecting a down move on USD Canadian dollar. If you look at these blue boxes, okay, what we're looking at is impulsive moves. Okay, well, after we have an impulsive move in one direction, okay, price then will then consolidate in a wavy fashion outwards up to a certain point, usually some kind of Fibonacci level, 61.8 on here. Okay, and then we get the next down move, then we get the consolidation out. Now, this is sort of proof that price doesn't always move, you know, the way you want it to, because price broke out this area last week. We're looking for a short here, okay, but it didn't happen. All right. Now this one here, we caught that a couple of months ago. Okay, that down move, we caught that a couple of months ago. But this is how price moves. You get the impulsive down move, and then you get the retracement. Okay, it looks like a flag. Well, it is a flag. Flag, bearish flag. And this is another one. And it's vital. In fact, if I turn it up, you sort of get the point. And this is a vital part of it, recognizing how price moves. If price moves down in that fashion, okay, the trend has pretty much changed, and then you can expect this period of consolidation outwards. It's the same on all time frames, okay. And then what we're doing is we're collecting our confirmations to enable us to get on this move to move down to the next resistance range, okay. And then we can get on this move to go up if we want, and then we can look for this move, okay, to go down, and the cycle repeats itself. But what we're looking for on this is we're looking for this next big move down, okay, because the market's moving in waves of 5. What we've got here is we've got 1, 2, 3, 4. Okay, we're looking for the last wave on this. So at some point, I'm hoping we're going to get this next move down, probably to this trend line. Yeah, so let's say, you know, potential for like 1,500 pips on this if it does come down. Right, and that's purely because looking at how the price moves. Okay, impulsive move, flag out, impulsive move, flag out. And on the hour chart, you can't see that. You just don't see any of this without, you know, looking back in history and seeing what's happening. It's vital to do that. While we're talking about candles, you look at Euro USD. We said it was it could buy earlier. What, you know, look at them candles. Them really, really strong bearish candles. Okay, now I'm not going to rush into a buy on this because of how impulsive that move is. Okay, we just talked about impulsive. It's really strong in one direction, and then you get the flag. Okay, so what's happening here? Impulsive move. Okay, flag potentially. All right, so at this point in time, I'm not looking to buy it. Okay. And this is where candlestick analysis comes in. All right, let's talk about these candles. So this 4-hour candle here goes down 137 pips. All right, these 3 candles, so in 12 hours, this dropped 258 pips. Okay, in the preceding 4, 8, 12, 16, 20 hours, it only retraced 45 pips. So who's going to tell me that this is going to go up here? I'm not the one putting in a buy here, okay? Because the candles tell me not to. Yeah. In fact, the candles look like they're exhausting to go down, okay? So when we look at candles, there's a couple of candles here that are quite interesting. So you see this red one. See the wick out to the top. Okay, what the wick out to the top means is price tried to climb up and then got pushed back down. Okay, so that's a bearish candle. The white one is a bullish engulfing candle. Okay, so that's signaling the trend is changing, short-term trend is changing. This candle next to it is a hammer, and you see how it's got the long wick down, okay, which means price tried to push down, but it was pushed back up again, and that is a confirmation of a trend reversal. Okay, and you've got the same with this candle. The thing is, though, okay, you see the wicks on either side. What the wicks are telling me is this is consolidating. Okay, this is consolidating up, and when it consolidates up, it's usually in a flag formation for the next down move. And then what we're seeing with the last two candles is very, very, very little movement. Okay, a lot of indecision. Okay, really small bodies, big wick out to the top. Okay, so price is exhausting here. Okay, so I'm not interested in looking for a buy at this point. If we go on to the hour, okay, it's not impulsive, is it? Okay, if there's a trend change, we're looking for more of an impulsive move, similar to that on the left. Okay, at the moment, I'm not seeing enough bullish evidence to tell me that this is changing. If we look left, okay, on the buy on we got on a few weeks ago, okay, you can see the impulsive move. Okay, it's sharp contrast to this mess. Yeah, can everyone see the difference between the two and why I'm not looking to go long on Euro USD currently? Boom. All right, much bigger. And then how do we get into the trade? Well, fairly simple. Okay, have an area of support and resistance. Okay, where's your previous area? Well, it's here. So if price comes above, if it breaks, it retests, remember. So if price is going to come above here, it's going to come down to test. So my entry point on this, in fact, to be honest, my entry point on this was all the way down here. I bought it on the break of this triangle, but an entry point on this, okay, you see it comes down, it posts this hammer candle here with the wick, long wick going down. All right, that is an entry point for me to go long. Okay, so as soon as that candle's closed, I'm happy to go long because it's the same. It's showing a retest and a failure to break the support zone from the opposite side of the pattern. Okay, so we're looking at these two areas with the circles. All right, peak symmetry. Okay, so if price is down there on one side, it's going to be down there on the other side. That's where we buy. Okay, we don't guess. We don't guess that this is the reversal without more confirmation. Okay, we don't know. All right, we wait for that momentum shift, and then the candle. Boom. Okay, there's in complete contrast to what's happening now. Yeah, it's not bullish enough for me. So the candles you want to look out for. If I'm looking for an entry, what I'm looking at is fairly simple. Let's move to another chart. See this on Euro JPY? That is not a bullish move. That's a flag. Anyway, 3 candlesticks you want to be looking for are for a price reversal. Bullish engulfing or bearish engulfing. Okay, you're looking for if that's a bearish candle, you're looking for a candle of the opposite color that is bigger than this one. Yeah, that is an engulfing candle. So that's, if I see any of these things after a trend line break, okay, I'm fairly comfortable with getting in. There's not really one on that example there. So let's see this top here, okay. Let's assume we had our confirmation, we have our trend line break, we're in our resistance area. What happens here is you have the bullish candle going up, big wick out, then we have what's called a shooting star, okay, and then we have the bearish engulfing on the third. That is a three pin bar reversal, okay, 3 candles. Yeah, it's the kind of moves you want to look for. Now, for me, if I'm in one of my areas where there's multiple indications that price is reversed, I'm happy going in on a shooting star. Let's see if there's a good example of this somewhere on here. So you take this top here and this bottom. This is the first example I ever came across that I use actually to explain why we trade in the areas we do, because there was a period last year where Euro JPY, there was swipe trades coming out, there was all sorts coming out, okay, about trading in the middle here, when actually, all you needed to do was wait for it to come to the top and come to the bottom, right? Because there were people losing some serious amounts of cash in the middle because they didn't know what the hell, didn't know where this was going, okay? And people going, oh, right, it's gonna buy here and then it would sell, and it's gonna sell here and it's gonna buy. It's just wait for wait for price to get to the bottom or the top, and then wait for some kind of confirmation or candle that you're interested in. So something like, if you want to buy, then let's wait for this downtrend to break, okay, and then get in on the retest somewhere around here. Let's say you got in this white candle here, okay, this hammer candle, right? Yes, it goes down a bit more, but your stop's there. Yeah, you hold the trade, yeah, and then it goes all the way to the top, and then it gets to the top. All right, if you want to put a pending order in there, you can. Wait, can't really. Wait for the trend line to break and then get in on the retest. There's a retest there. I'm not going down there for 1 hour, but there is, because you can see there's a wick that goes down there, there's a wick that goes up there. So there's a retest of that trend line. That's the area to get in. Or if you're feeling brave, you can put a pending order on the top, or get in after that shooting star, okay, or get in after this bearish engulfing's formed. So it's not, entries aren't rocket science, okay. Well, most of the time you just want to wait, draw a trend line in, okay, wait for it to break, and then wait for it to retest. And sometimes it doesn't happen, and that's just part of the game, okay. In this case, you can enter when the price breaks that trend line if you want, because your stop's down here anyway. If it comes down and retests, okay, it's still above your stop loss, so you're all right. It's the people that trades and then put their stop loss in the middle of the mess. Yeah, by the breakout, you put your stop loss in the middle of the mess. What happens if it comes and retests like it does most of the time? You're screwed. Yeah, stop loss below. Okay, and then you've got the next down move there. Wait for price to break, wait for it to retest, buy. Bullish engulfing there, okay, hammer there, bullish engulfing there. There's 3 areas you can buy that. And then when price gets back to the top of this area, do you know what? I'm just putting a pending order on that, because it's moved so strong, and this is a great example of supply if you look at the peaks of these, you look on the peaks of these tops, okay, you see how strong price moves in this area. Okay, once it comes back up here, you can just have a pending order set on here for like weeks if you wanted. Comes back up, boom, you're always going to get that reaction. Okay, always going to get that reaction in a supply area. All right, so sometimes you don't even need the extra confirmation to get in. But what I'm trying to get people to avoid doing is what everyone does. Okay, and what everyone does is they trade in here. Pointless. Pointless. Trade where everyone else, trade where the bankers trade, not where the retail people trade. So James says round numbers is quarters theory. Yes, quarters theory is something I'll probably incorporate more into my trading, but yeah, it's pretty much the same thing. It's a major confirmation. Round numbers is a major confirmation for me. Let's talk about retest. All right, let's look at the pound US dollar on the monthly. Okay, this is an example of a chart pattern that I really like. So head and shoulders, okay, across a phenomenal time range. This goes back to 1994, this chart. So if I'm going to put my major support and resistance here, it will show me that, you know, what this essentially, I don't need any more than these two lines to know that there's a head and shoulders formation over at the last 24 years. Boom, boom. Okay, and then what we've got is we have a retest of this area. Boom. So even on a monthly scale, guys, it's still relevant. Okay, and if I press that, this is something I put out on TradingView in January. Okay, and it's moved down 900 pips since. Okay, and that's all you need. That's all you need is those two lines and a little bit of education. Okay, head and shoulders, break of support. Okay, what breaks must be retested below this line, you short. Okay, above this line, you buy. Congratulations, you've just got yourself a 900 pip move. Okay, and potentially, let's say another, God knows how many more pips. Okay, I can't see the pound going, you know, less than $1, less than £1 per dollar, but who knows? It's a crazy world we live in. So what is broken must be retested. Okay, and another example, what you could do on this trade. Okay, let's pretend this is a normal chart, and you had an entry at the top of this resistance zone. Let's change that color. And your stop loss was above that area. So when price comes down, and again, this can apply to any time frame, once price comes down, okay, you're going to have a take profit. You're going to consolidate some of that profit in this area, near the top of that area, really, just to make sure you do get that profit. Now, you're not going to close all your trade, or you could twin trade. And then one of your trades closes here, the other one waits to see if you can push in to this area, and you collect that next range. Now, the reason I'm showing you this is because what we're talking about now is stacking. Okay, it's proper stacking, not web analyzer stacking. So once price has broken through your support resistance area, okay, you can move your stop loss above that demand area, because if it's on a downtrend, you would not expect price to come back above this area of support resistance, okay, because that's what's the area that's supposed to be protecting you. Okay, so you've got to believe in, you have that shield in order for it to protect you. Okay, so you move your stop loss down there, you've got one trade going on. When price comes back to this area, you've already protected sort of 80% of your trade. Okay, so you can put another trade on when price retests this resistance area, because it's broken the support, therefore it would retest, okay, and then get the continuation down. So now you have two trades on, and those two trades can go on forever and ever. And then the same thing happens when price breaks through this area of support resistance. Okay, both stop losses come down to above the demand area. When it retests, okay, you can get a third trade on. That is, you know, the most simple way to do it. That is stacking properly, not like put 10 trades on at the same time. That is not stacking. Okay, this is stacking. This is multiple entries in different areas of support resistance, okay, on the retest. These are the trades that will double, triple your account, okay, across, you know, 4-hour time frame. I'll stop in a minute. I've run out of time, but if you look at the pound US dollar, okay, 143 at the top, I think, you know, 144. Okay, so what you can do here, if you look at the top here, okay, you've got this very clear level of support and resistance here, okay. So what we can say is, you know, it's clear resistance area there. So once price breaks through this area, it will retest on this resistance level. So there's a really good entry into this down move on GU there, okay. And then we can look left and we see, right, there's obviously a support level there. So once it breaks that area and retests, there's another entry for me. Boom. All of a sudden, you've got two trades on from the top, and it's moved down like 500, 900 pips since, you know, 800-900 pips on two. You've got two trades at least in there, okay. Where's your next support area? Doesn't really work for this area. No, you could potentially do that as well. Yeah, you've got the shoulders there. Okay, I'm not doing a full analysis on this. So, you know, there's potential free entries if you want. Yeah. Yeah, it's crazy, guys. It's crazy how simple and effective it is. Okay, and you know, if what was I saying? Oh yeah, sorry, Andy, I forgot to talk about that. The candles you need to look for. All you need, as far as I'm concerned, all you need is a candle that looks like that, or similar to that. Okay, so bullish candles, there's a hammer there. I don't know the names really, I just know what they do. Okay, so candle that looks like that for if you've had the great lines that have broken, or you're in an area of more than one supply or demand hit, okay, that's a hammer candle. Or you can look for likewise at the top. It's all about wicks, guys. At the end of the day, it's all about wicks, okay. If price is going down, then look for a shooting star like that. Engulfing candles, so if you get an engulfing candle, that would look like higher. Okay, so the body would be larger than the candle before. That's an engulfing candle. Okay, so this one would obviously go down, looking for a down move, and this one obviously looking for an up move. Okay, and you know, the other thing is it's just a combination of the three. So it's just a pin bar reversal. If you're not sure, then just give yourself a confirmation with a 3-bar reversal. So it's sort of a mixture of the three. Okay, let's say it looks like that. Okay, there's a reversal pattern, candlestick reversal pattern. So if you see any of those three things, you can get in the trade if you're in the right areas. Okay, with retests of areas, you can put pending orders on if you want. I use other stuff. You know, people that know my strategy and my techniques know that I use moving averages a lot, but I haven't got time. I haven't got that much time to go into details on this stuff. You'll see, because we catch the bigger moves, if we wait for full candlestick reversals all the time, we miss the majority of the moves. Okay, and I do all of my candlestick work on the 1 hour. Okay, 1 hour. Let's go all the way back to go in these areas. So on this retest here, okay, you could pending order. Okay, you can put it on there. That's fine. You can also get in on. So on this one on the left, you could get in on that shooting star, that little shooting star there. On this one on the right, you'd probably get in on the reversal pattern with the 3 candles or the bearish engulfing candle there, and then catch the entire move. And again, this is an example of people that get the right entry, okay, but price comes down, they move their stop too quickly, get stopped out of the trade, miss the real move. Okay, believe in your trade, all right? So yeah, so there's a shooting star there, you can get in if you wish. There's also a bearish engulfing candle there, you can get in if you wish. And on this one, let's say, okay, you can get in on either this bearish engulfing that breaks through the trend line if you wish, or you can pending order, or little shooting star there, you can get in on that as well. Boom. This one's beautiful. Okay, if price was in this area again and that shooting star formed, wow, it's sort of a doji, but it's got a really long wick out the top. Okay, I'm getting in after that candle. Boom. All right. This one, pretty tricky. This one, pretty tricky. I might not have ended on that one. Probably wouldn't have ended on that one. Right, so that's about all I've got time for, guys. Yes, I'm going to try and do the public Zooms. They're not going to be, regular things. I want to concentrate on training with my team, but I've had a few mates asking what I do, so I thought, you know what, I can do one in public. I'll just keep the rest in private. So I hope it's been useful to you guys. Obviously, people that have followed me for a long time know I do a lot of this stuff. I'm very passionate about it, and I can talk for Britain when it comes to this stuff. So appreciate everyone. Thanks for your time. And get in contact if you've got any questions, or if you want to join or whatever. And I'll talk to you all soon. So
cheers again, mate. Much appreciated.
All right. Yeah. Cheers. And for those of you in the Ninja group, Dylan's got a Zoom about entries now. So the link's in there. I won't put it here because obviously it's private. All right. So cheers, guys.
Much appreciated, mate. Speak to you soon, Bradley.
Yeah, laters.